All right, all right, all right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage, and we're definitely happy and grateful for each and every one of you being here with us as we take a look at these technicals and fundamentals to see what's out there for us to grab a hold and take advantage of. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure, as always, that we participate and engage. We run these sessions so you can get your questions answered, right? So if there's something that you don't understand, please ask, right? Either take your microphone off mute and ask the question, or type it in the chat and we will answer the question to the best of our ability. All right, so if everybody hears me loud and clear, always quick sound check, drop me a 1 in the chat. Let me know that you all are all set and ready to go for tonight's session, and we'll get this party started. Good evening, everybody that just joined us. Let me get you all set up. Okay, as always, we just ask, hey, let's keep those microphones on mute if you're not asking a question or making a comment, just out of respect for everyone else. All right, so I think we are all good to go. I see the ones coming in. I always appreciate that. Let me escape out of here, move some things around, and close this out and go over to trading economics. Hey, as we said, this week coming up is going to be a light week after all of the fireworks last week, and it pretty much has been, right? We've got Fed members, central bank members across the globe speaking. We know we had Chairman Powell yesterday. We had another central banker speak today, but for the most part, pretty steady, right? Asian stocks mixed on Fed jitters. Okay. Asian equity markets were mixed Thursday following a weak session on Wall Street overnight as the Fed officials reaffirmed their commitment to bringing down inflation with more rate hikes. Investors also braced for corporate earnings from major firms in the region, including Toyota, Nissan, SMIC, and SMIC shares in Australia and Japan fell, while Hong Kong and China stocks gained. So what they're talking about is, if we come and let me see, go to the 8th and right here. So FOMC member Williams speaks, and you can see we need to maintain, right, a restrictive stance for a few years, right? So the market's betting that, hey, they're gonna pause rates and then eventually cut this year, second half of the year. Powell keeps saying there's no way. This gentleman is saying we need to maintain restrictive stance for a few years, right? So Williams, Fed policy is barely restrictive right now. Labor market is very strong, right? So I see why, right, the market may be a little bit concerned, right? Because it doesn't fit their narrative, all right? But this is the narrative that the Fed's been driving home pretty much all along since all of these interest rates start getting hiked last year, right? So that's where we are on that. Always find that back and forth between the Fed and the market to be quite interesting. But as the saying always goes, don't bet against the Fed. Don't bet against the Fed. So yeah, that's that. As we look into Thursday, we got the monetary policy report hearings for the pound, right? That's always important to try to get an idea on forward guidance there out of the UK. And then on Friday, we've got GDP numbers month over month for the UK. That's always important. And then we've got some employment numbers coming out for Canada. And we've got the preliminary University of Michigan consumer sentiment and U of M inflation expectations. So on the fundamental front, like I say, pretty steady overall. Ryan, good evening, sir. How are you?
I'm doing well, bro. I'm doing well. Been a good day. How are you?
Oh man, I'm doing great. Doing great. The weather warmed up a little bit. I'm always good and happy for that.
It did, man.
Maybe you want to break out some golf clubs, even though I don't hardly play.
Listen, let me know. I got some new ones. I need to practice swing because I might break a window at the moment.
Absolutely. So, but anything that you you heard about today? I know you had a busy day. So
No, you touched on it. There was an article. I didn't actually get to read all the way through, but the headline was Powell's enthusiasm has decreased, talking about it centered around Waller statements, and how they might need to continue hold those rates for an extended period of time. So
yeah,
should be interesting. But that's it though.
Yeah, gotcha. All right. Cool deal. Let me see. Anybody else? Any other questions? Joy, I saw that question in the Discord. It was busy. I got in there right before it was trying to jump on about that 2-year, 10-year bond question. Right. That's another data point. And what we'll do is we'll recycle that bond trading again. We'll do that again. We actually need to probably touch on it like once or twice every year, just so everybody's familiar with it in regards to that bond. But that 2-year, they look at that curve right between the 2-year and the 10-year, right? So it becomes a data point for short-term and long-term outlook, right? And confidence in the market, right? So when you start seeing the curve between that 2-year and 10-year shift, it tells you something about the market in regards to what the sentiment is, right? That long-term outlook, if it's bearish and they're not thinking it's too good, you're going to see that yield curve start to invert possibly. And it used to, for I don't want to say it used to be, but historically, whenever you see that 2-year and that 10-year, that yield, right, that yield flip, right, when you see that conversion, right, on the graph start to flip around a little bit, that's usually, right, when you see it, okay, when you see that that inversion, it typically has been in the past a sign of a recession, right? That's kind of looming. So that's why a lot of times people tend to watch that. But that's from a historical perspective. We did see the yield curves invert, right? I can't remember. I think it was back half of last year, right? Where you did see it happen, but we still haven't hit a recession yet. So we're in some pretty unique times. Can't say that enough. So some of the historical data points that people look to for signs of a recession or growth, or it's not the same somewhat, right? From what we've seen, but we once in a 100-year pandemic, a war, inflation, supply chain disruptions, pumping a lot of money in the system globally. Then now you have to go through a global tightening phase. It's been a pretty unique cycle in a sense that not that none of this had ever happened before, for it to all happen seemingly at the same time, right? Pandemic, supply chain, war, inflation, like stimulus, monetary policy tightening. It's been a whirlwind, so it doesn't surprise me that some of the data points that a lot of investors tend to look at as they gather the data and try to gain a consensus or gain an idea, right? And a bias in one direction or the other. Sometimes those signals are a little bit mixed during times like this. So it really kind of puts you in a situation where as a trader, technically, it's like, hey, at times you have to trade what you see, right? Which is why I love those 80-20 so much, because it seems like no matter what the conditions are fundamentally, right, that market still moves in waves, right? And those key zones still play out. I think that's the one thing that we've realized that's pretty steady. In times of uncertainty, it's like, man, those still, and Ryan, you can let me know your opinion on that, right? Let the group know. Like, it seems like that's still been kind of hold down the fort, that go-to setup. So yeah, I plan on to continue to trade that.
Yeah, man, absolutely will.
Yeah, and indeed, it's like that technical pattern continues to show up, right? No matter, as we always say, no matter what the asset class. So we take a look at the dollar, okay, and we can see here from the daily, what it's doing. I don't know if I need to clear all my charts, like completely Like
Mine was doing it earlier too, man.
mine's been doing
I'm
it
not
for a while
sure.
now, so I don't. Yeah, I don't know if I need to go. You could go for people who don't know. Like you could go to like your global settings, and I could delete this entire session, and it'll wipe out every single workspace that I have, and then I can just start from scratch. So I know they made an update. Same. I was thinking the same. Yeah, I know they did the update, and I uploaded it. Right, I clicked on it but I don't know if I need to redo everything or not. I don't know. I usually go to Facebook and go to their support and ask the question, but then I might have to call them. But it's getting a little bit annoying at times. But we can see here the dollar, right? From the weekly perspective, we had that bullish week that closed on the jobs numbers, and then right now we're kind of neutral, right? Neutral to bearish. I just been lazy to start all over. Well, I that's a thought, but that might not even be the issue, right? You start all over, you're just like it's still doing the same thing, then you'd be extra mad. So, but sometimes it's good to clean it up though. So we can see here the dollar on the daily, right? Well, we're back to being oversold. We're up there, right? 93%. The momentum may be slowing to that upside. But we see we're kind of neutral here, right? To stay within that AB boundary. But here's the thing. What's amazing, right? If you go down to your 4, okay, you can see clearly that no matter what the asset class, right? This is the DXY, we don't even trade it. But when you drop a fib on it, you can see it gave us the same price action, right? So there's the explosive move off the jobs numbers, but that's an 80-20 zone, right? We know that. Guys, we have to know that setup. Okay, that's the bread and butter of what we do. This is what we spend years, right, developing and back testing. Okay, once it was taught to us by our mentors that hey, this is just one of the zones, right? This is just one of the zones that you can trade, and it's something that Ryan and I decided to really narrow our focus on and really get into really testing this setup. Right, and really grabbing a hold of it and coining that 80-20, right? So this is no matter what you have a DXY that did the same thing, and this is right around your jobs numbers and everything, right? That huge move to the upside, but look at the zone that it was in, right? So that's a very, very powerful play. You didn't get an AB boundary with a 382 right out the gate. It broke that B boundary and it settled, and hey, you got strong weekly support there. So that's just extra confirmation, and you can see how we got that move to the upside, and we know that overall that dollar had moved bearish for quite some time. Okay, so this is where we are on the dollar right now. So it's kind of a wait and see, right? Especially with a lot of the Fed rhetoric this week, right? With with Fed members speaking, you got some other central bankers speaking around the globe too as well. So that's the dollar, and I find that fascinating. That's the one thing in this market that I truly believe is a pattern-driven market, especially the Forex market, because of the volume. That's the one thing I can hang my hat on right there. All right. So that's your DXY. Any questions on the dollar or anything that we've discussed so far?
Benny, so even though this is an 80-20 play and the Fed is hawkish, could we see that as past resistance as future support, or just have
Where, right, with this right here, where we're at now? It may shape up. You see it's in a zone. Like, so when you've got these areas real tight, we've got our lines highlighted. So that's a daily and weekly zone, right? That is broken through. See? Like that. So it's more so like this. Okay. Like that, right? So it's just a matter of, if I'm looking at the dollar right now, it's like, okay, it's moving sideways clearly. What's going to be the next move? So it's trying to retest this zone. See how it broke it and then pulled back. We know that the break and the retest. Okay. Past, like you said, resistance becoming future support in this zone. So now we just wait and see where we start to get closing prices at as we move through the rest of the week. If it holds above this zone, then you may see more dollar bullishness, right, in the future, and then you can play your other currency pairs accordingly. But this has been the fact that, hey, this is a daily fib, and we came down, right, 86, almost 100%, and it just didn't tap out, right? It made the U-turn. So what's going to be interesting is now, right, we've got the momentum way up here, right, overbought at 93%, not at 100% or anything yet, but we're over 80%. It tells us sometimes, hey, the momentum may slow. Now, it's not a timing tool because it could stay up at these levels for however many days and weeks that it wants to. But the question becomes, we watch the fundamentals closely, right? We see that the market's having jitters because of the Fed, you know, and the rhetoric and the things that they're saying, even though we know, right, that, okay, they're not as aggressive with 75 basis points anymore, but they still hiked to 25 basis points, and they're saying, hey, might be more in the future. You got this gentleman, Williams, saying, hey, we need to keep this at restricted levels for several years, meaning whenever we get to a neutral rate, maybe it's 5.25, you know, 5.5, whenever we get to that neutral rate, we need to hold it there for a while. So all of this talk about cuts and all of this stuff right now, based on the data, because they said, hey, we're going to be data dependent, based off of that jobs report, it don't look like cuts coming anytime soon. So what we have to do is we have to watch this, right? So over the next days, couple of weeks, do we correct, right? So if this momentum on this stochastic and everything starts to shift back to the downside, how much is price actually going to move? If it's just going to move and then hold and find a support here, right? Will it push down and form a support? And then we get a higher low and a higher high. Now we're moving, right? Now we're back long. Now we're back long the dollar, and the correction potentially over at that point. If we start breaking and retesting zones. So right now where we are, we got the explosive move to push through that resistance. Now it's kind of a waiting game there, right? Like what's going to happen? Are we going to form a low, right, which will a swing low, which will give us a higher low, and then are we going to look to continue up? All right, so that remains to be seen. That dollar could be a tricky one because it can act, right, as the safe haven, right, when there's concerns, right, when that VIXY and the uncertainty starts to come in and the market sentiment starts to shift, right, money can move, flow, or, you know, it can flow right into the dollar, you know, but then when times are good, right, money can flow into the dollar, you know. So it just depends on what the fundamental narrative is, what the stock market is doing, and things of that nature. So we'll continue to watch it. We'll continue to watch it. It is quite interesting, but you can see a huge correction, right? 80-20, right? 80-20 when it collapsed. Okay. So, hey, we get to the technical levels. What's the fundamental catalyst to get it moving in the direction that we think it's going to move? All right. So that's that. Great question. Any other questions? No? We're
No,
good?
sir.
All right. Sounds good to me. So let's dive in and take a look at, right? So we're starting to see some things. If we just want to check in on a couple of pairs and look at some things, because sometimes depending on the time frame you're trading on, you got multiple things going on, which is pretty cool. So if we look at this Euro CAD, right? We've been watching this, how it's just been hovering, is now finding support. It made a nice move down, right? We're starting to kind of form a little base on that daily. We're over sold on the daily. We know what's going on here on the 4, okay? But we know, right? This is the power, right? We know that the market moves in waves. Huge impulse move. So think about this now, because the time frames are fractals. So as we look at this 80-20 on this 4 hour, right? That's a huge play when you start getting up with 4 hour daily, things like that, right? For these swing positions. At the same time, we know that this has been a huge impulse leg down, okay? Huge impulse leg down, almost 300 pips. Now, we know that the way price action moves, right? Because we all been in the back office, we've seen the training, right? We know that this market moves in waves. So when this, unless it's crazy fundamental occurrence in the market, right? Like a ridiculous jobs report, right? That comes in way over forecast. Typically, the market doesn't just do like this. Okay? It's going to move in waves. Okay. So instead, right, that market's going to make those A, B, C, D waves. Okay. Okay. Right. So on the way down to its target. So yes, price may eventually get to that 382. Okay. But in the meantime, right, you develop your spatial intelligence and eye for the market. Something's going on those lower time frames, right? So when you come down, you know that this moves in waves. Okay. We can scroll out and we see, look, 1 hour, the fractal movement in the wave. We didn't hit the D extension and we're moving. Okay. So there's a potential for a longer play there. Who wants to make that check back? Okay. But we come to the 15, right? When we've already been eyeing up, you can say, look, see? AB boundary, shallow retracement, less than the 382, paused at the 236, broke down. We don't control all of this. What we control is identifying the zone. Okay. Now you have a U-turn. Okay. So on the 15, out of this zone, okay, right, you come off this 127 zone to the 382, okay, 64 pips to the 382. We're starting to close in on that, right? We've gotten back above this 144.13 4-hour level and a daily level here at 144.08. Okay, so we're closing in on that 382 target. Now, if it's going to continue to cycle through and get long, right, then you got even further potential upside on that, right? It may just keep running, right? The euro versus the CAD. So what I'm saying is that could potentially turn into a deeper correction, right? Back up into these levels, these 4-hour levels, even a little bit higher on that, and then make its way down, right? So there's multiple ways, right? You can skin the cat, and it's depending on the time frames that you like. Longer term swing, but then you've got these smaller moves, tier 2, right? And when we checked yesterday, people say, hey, we like those 15-minute type of setups, okay? Be in and out within the week, especially if you catch them earlier in the week, but that's a pretty good move there. So that's where we are on a Euro CAD, right? We're correcting right now to the upside. Any questions on that? I know I said a lot on that one scenario. Well, one setup, multiple scenarios. Right? These are just the ebbs and the flows of the market. Right? This is just how the market flows, right? And we look and we pick our spots. We pick our zones to trade. So that's the Euro CAD. All right. Let's go and take a look at the Euro Swissy, check in on that and see what's going on there. Okay. So we can see it from a daily time frame, right? Here's the correction happening. Right? Here's the correction happening here, right? So we're coming in at a 50%, not quite to a 61A yet. It may eventually chase that support at 98.24, but we can see, look, oversold. The momentum may be starting to slow to the downside, and we may start to get that euro, right? It was bullish. Then we went through pretty much several days where it's correcting. And now, right, it may be time for that euro to start shifting again, right? So we drew this up on the 15, and we can see, like, see how it pressed down? We keep that wider stop on it. 1% is 1%. And you just let it try to make the swing. Hey, when it gets there, it gets there. Can't worry about it. If it's going to make that move, it's going to make the move. Okay? But you can see how, look, it tried to turn over. Now it's finding support. Now it's trying to turn over again, right? So if it's time for this to make that swing, if that's what it wants to do, okay, then you can see, right, it's already moving here, right, on your 5. Okay. So when I see that type of move off of a level or a zone, I come down to the next time frame and say, okay, it's already taken off. What can I do? Well, maybe I could catch it pulling back. Right? I don't necessarily want to take it there, but maybe it hits the D extension and gives me a fib above the cloud on my 5, right? Or maybe we get it to short. Maybe it doesn't. It's an 80-20 right now. Maybe it doesn't. Maybe it, man, maybe it maybe it doesn't, go straight to that D. I get this pullback and this correction, and it'll give me an opportunity to get into that move to the upside. Right. Right. So maybe we get that play like this. That move back down, and then I can look to get long. See? So that's what we're looking for at these levels, right? In these zones, is we're looking for that reaction. Look at that reaction. Boom, straight up. Right? So it wasn't quite ready, right, at that zone. But that's fine. We didn't hit that D extension yet. Okay? We didn't hit that D extension yet. And then look at your reaction. You're getting off that 4-hour level. So let's see how that plays out. All right. Let's see how that plays out. We got back to the 382. Call it 79, 80 pips or so. This D extension. All right. 44 pips. Okay. Almost a 2-to-1 there. Off the swing. So let's see what happens. Let's see what happens with that. Any questions on the Euro Swiss? So what you're doing is, when you can come to these lower time frames and catch, right? Hey, I got an 80-20, is giving you an entry for a possible longer play, right? If it's time for that market to make that U-turn, right? If you look at this daily chart, if that euro stays strong, which a lot of people have been fairly hawkish on the euro with the monetary policy and things that were expected to happen in regards to energy crisis and things like that, didn't seem to necessarily come to fruition. So that's positive, right? That's positive. So, right, oops, the wrong thing. So while you're on the lower time frame playing in the weeds, you may be getting yourself, right? This is how those big crazy runs happen, right? Because you may be getting yourself involved in a higher time frame play that's ready to reverse 530 pips. So we're down here finding 80-20s on a granular level, right? A micro level that could lead to being like, man, that's that entry for that runner. Right. So something to think about. Something to think about. All right. So that's the Euro Swissy. I want to take a look at this Euro GBP. Okay. And we can see how we come into this 4. Hey, we called that, right? AV boundary. Hey, we're looking for this to correct. We drew it up on Saturday. We're looking for the correction. All right. We even said, hey, man, this might pop up, become an 80-20 to give you an opportunity, or, right, wait for it to push down and then maybe get long, right? Now, some people like to play those B2C moves. That's fine, too, because we do have that as a sweet spot, right? You watch the training. That is one of our sweet spots. We say, hey, B2C to at least that 382. And then we talk about that classic 80-20 zone, right? Back to the 382, like that, for the kind of trend trade setup. Okay? So some folks will drop down 15-minute, right? Look for a cloud break, look for a trend line break, and hey, they made their money. So Benny, how do I know when to take that? What does your trade plan say? That's what it comes down to. on whether or not you play that type of move. That's the answer, right? That's the answer. Okay. So if we come down to, right, I want to talk about this because you can see how things start to cycle, right? So we've been getting that correction, and now we're sitting here in this zone again. We're finding daily support on this euro pair, 88.65 in the 80-20 zone. Okay. So you say, all right, well, take the zone. There's my level. Call it 20 pips. Back to that level, right? 35 pips, right? So it's almost a lot of times like a 2-to-1. That is a super easy setup. It's like it's building it all out for you. Everything is there. Right? So what is almost a 2-to-1? We know that if it's time for that euro, we know that euro pushed long, right? It pushed longer than it corrected. Okay. See where it's at? Right? We finally got it to break out. So it's like, is it gonna be time for it to make a run here eventually? Don't know. But in the meantime, right, you can make that play. You can make that short-term play, and then maybe it doesn't get as deep and it takes off, right? And maybe you secure the bag on these lower time frame situations and you're done. So that's where we are. Any questions, right, on the Euro GBP? All right. The simple plan is 80-20 back to the 382. Right? Back to the 382. And that's that, right? Back to the 382. Boom. Decide. Do I want to play this where I close out, right? We talked about it last night. Do I want to take 75% off and let the rest run? You can do that, right? You can do that. But the first thing I want to do is get back to that 382. Get back to that 382. You can develop and decide, hey, I want to let that sum run, right? But that's the first thing you want to start doing consistently. Let's get back to that 382. And I say that because when I say let's get back to that 382, we know, right? This is when the head games start. Right? This is when the head games start, right? When we start getting all the lists here, the price is jumping, and it moves on us, right? This is when we take our money, and then price goes like that. So that's where we want to develop that discipline. Because why? Because we started the whole trade idea with how much can we afford to lose? I'll say it until I retire. Because that's what's going to give you comfort and where you could go to sleep at night. Not worry about it. Okay. What can I afford to lose? Everything else is icing on the cake. All right. So that's that. I want to take a look at this this pound cat. Because I've been waiting to see, right? I drew a trend line. And I missed the initial break, but it's cool. So look at what we got going on here, right? Now, this is not my ideal spot, but we've got a double bottom at this 382 from the higher time frame fib. Okay. Stochastics in the buy zone. Right. I'm going to pay attention to that. Right. Okay. Pay attention to that, right? We got price double bottom and we got another swing low. So it respected that zone twice. Okay. And now we're getting bullish. So when I start working my way down to the time frames, right, you can see, look what's going on here. Right? See how I formed that low? See how that zone held? What I was waiting for is, hey, look, can we get back above these levels? And we did, right? So if we come down to the 1, see what's going on, right? Look at that swing. So now what I'm looking for on this is this is gone now. I missed it, right? It is what it is, okay? But now we're on the other side of this trend line, right? So technically, right, that's my buy zone right now. So what I want to see is, hey, let's get to that D extension. Let's get to that D extension. And then let's see what happens, right? Let's see what happens. Can we get a pullback and a continuation, right? Pull back into these levels and these zones, and then a continuation from there. Okay, so we've broken through to the other side. Look, we've taken out resistance, and we know price likes to score a point and pull back. Now it's holding above that right now, so it's like, okay, well, if that D extension gets hit, that's cool, right? I'll wait for the reset on that. But that's one that's on the radar. Is now that we've finally broken that inner trend line, price a lot of times likes to gravitate from the inner to the outer trend line, inner to outer trend line. So if that's the case, I want to see if here in the near future, if we can get a good entry on that. Okay, so that's the pound CAD. That's something to watch out for. Just, hey, I know where I really like my sweet spot at, but I do have a key field level with 382, and we got price double bottoming. Past resistance becoming future support, not once, but twice. So gotta pay attention to that, right? Even if you're playing, right? If I'm playing 0 fibs on my chart, and I'm just looking at price action, support and resistance, that has to wake me up a little bit there, right? Hey, that's respecting the zone there, okay? That's respecting that zone, okay? Right? So it's testing that area again. So I'm thinking, hey, off this daily chart, potentially, right? Back to what? 164, 370, maybe a 4-hour, 1-hour zone there. Okay. Get back there, right? We break above that level, then we break and retest. Okay. Same stuff, right? It's just we're just putting all the concepts together. Right? All the concepts together, but you got to respect that double bottom till it tells us otherwise. Right. So we got 2 to the left, we got a center week low. We need 2 to the right. We need the day to close out in the Asian session now. We need this day to close out high, and then we have an opportunity for a push back to 164, 370 potentially. Any questions on that? Yeah, well, Joy, because it was moving down, right? And it was moving down, but when you come, like, I'm like, all right, that's a good technical structure there. Gotta respect it. It may pull back, fill this wick, and turn over. Right? I just know right now, right? It's respecting that zone. Mm-hmm. Mm-hmm. So you can win multiple ways in this game, right? Multiple ways in this game. So you may be right. So in the medium term, you may be right. This thing may turn over and crash, right? We're talking about the pound, right? It seems to be a divided central bank at times. So there's no telling, So hey, good job. Good job. What's important is, right? You're in the arena. You're in the arena. So that's what's key. That's what's key. All right. So We'll take a look at this pound New Zealand. Okay. Yeah, I think I'll just take a look at this one on the on the 15th, and I just wanted to review this one because right when I always try to go through the charts and look at 80/20s and things that play out, right? Just so you guys could just get a feel, right? That's what part of the session is about, is to get a feel of what does it look like, how often is it occurring, right? So you can see here as we go back, okay? AB boundary, right? A, okay. B, okay. Shallow retracement, 118, 127 zone, exploded. Okay. Then we turned over. That's a classic ABCD move. Right? Classic ABCD move there. High correction. And then a move back to the downside. As long as it doesn't take out the A, it has no choice but to go your way. Right? Now look. AB boundary. Shallow retracement. 118, 127 zone. Boom. Back up. Right? So that's a, hey, I'm to the 382, 180 pips, 75% off the table, leave 25% to run, right? Total 244 on that. So what this does is, this just takes a lot of the guesswork out. It's like, all right, so if I'm, you guys let me know, right? If I'm picking up 200 plus pips off this one move, do I necessarily need to be concerned of whether or not this is about to make a C to D move or if it's going to take out this A? Ryan, what do you think? Somebody.
My bad, bro. What was your question?
I was just saying, like, if I have an AB boundary and I just played this 80/20 for 200 plus pips to the upside, right? Is it really a big deal? Do I really need to figure out if this is about to make a C to D push or if it's going to take out this A after I've made over 200 pips to the upside?
Yeah, nah.
Right, Jerry, not at all. It doesn't.
Nah.
Right. So we're trying to, we came together at the end of the year, like, how do we really bring this, right? As the great Joe Madison would say, how do we put this where the goats can get it? Right? How do we keep this as simple as possible? It's like, no, it doesn't matter. Why? Because I'm out of this trade. And if it goes, right, follow me, everybody. If it goes from the C to the D now, right, that's an 8-6, the deepest, it goes to the D. Okay. What's going to happen? It's going to form a new AB boundary at some point, and you're going to be looking for the same setup, just like you did here and here. You're going to look for the same setup. I'm not even telling you to play a B to C move. I'm telling you this is what you're going to look for. Okay. Now, if it takes the A out, right, and continues long, and everybody, this is the magic in fractals, right? Understanding the time frames and understanding the sequence. If you've seen this long enough, all the times it doesn't matter what's going on the other time frame. If it takes this A out, what is it going to do? A new fib is going to form to the upside, like this, right? New fib is going to form. And what am I doing? I'm looking for the same move. Shallow retracement, breaking the B boundary, 118, 127 zone. I'm going to short. Back to my sweet spot. Right? I'm going to short it back to my sweet spot. This is something simple, right? That you can master. Yeah. If you plan a C to D move, right? Hey, what's the overall trend direction? Right. So if it falls to 61.8 and I want to get long, what's my directional bias from the top down? Okay. You come to master that eventually. But what I'm telling you right now is that this move, the reason why we put so much research and studied it and got it hijacked is because, right, we put the time and the work into it, and it literally doesn't matter. This is what the market loves to do. Everybody follow me on that. Drop me a 2 in the chat. And if you set up, if it doesn't give you that price action, because we're trying to get you to the point where it's like, why you develop, right? And develop an eye for these other setups, right? Those big C to D swings and things like that, right? This is something that you can take advantage of now and use proper risk management. Okay. So if you don't see, this, type of scenario, move to the next chart. Right. If you don't see this, move to the next chart. And record it and journal it and build you a track record with that. Okay. So that's the pound New Zealand. Okay. It's another one. Okay. I want to take a look at this pound dollar. Okay. It's moving crazy. It's whipping around all over the place. But all I wanted to do, what I would prefer, is that it hits my 382 and doesn't hit my stop. That's it. That's all I care about. I don't care if it takes 10 days, 5 days. I don't care if it moves up, down, and sideways 30 times to get there. All I want to do is see this play out and know that I got my backside protected if it doesn't. That's it. I want to see this hit that level. I want to manage the trade. I want to take 75% off and see if I can let the rest run. That's all. There's the 1 hour. Less candles, moving in the same direction. Look. AB boundary. Shallow retracement, 118, 127 zone. Right? It got there. Got there. Questions?
No, sir.
All right. Entity CAD. Right. Let's look at it though. Moving too fast to the lower time frame. Right. We gotta pay attention to that. Right. We gotta pay attention to that. We gotta pay attention to that. What's the common denominator? The CAD. CAD. Right. As crazy as it looked. $382. 618. The TP3 is always the A boundary. Right. And here's an example, right, where you didn't get it. Right? You didn't get it. That's okay. Why? It hit my stop. It's all good. It's all good because I came back on that next one. Right? 38 pips or whatnot. Got me close to 70. Right? I moved in here. Look, previous fib, I lost 35, 37 pips, whatever it was. But I came back here and got about to get me 70. I'm up. We're not going to worry about no stinking loss. Where's my next setup? NZD Swiss. That's a swing. That was gone. That's going to hit the 382. Right? That one's gone. This one here, right? We reversed, didn't hit the D. We came back down. We hit it. We lost it. So what? Right? That's how you have to become about your losses. So what? Because why? My risk management is tight. We got a reaction, right? We just didn't finish the play out. Okay. Just didn't finish that play out. 40 pips turned over on us. Okay. New AB boundary, that one's moving, right? That one's already making a swing. If this right is my ace in the hole, I'm letting that one go, right? But if you say I'm only going to play the 80-20s, we're not playing that B to C move. You have to be willing to let that one go. But the sequence is playing out. And being that we didn't get, right, we didn't get a deep retracement on that one, right? When you look at alternating corrections, this may be a gigantic correction that might take the A out. We'll see how that goes, right? That New Zealand versus that Swissy. If that New Zealand's ready to pump and get long, right? We'll see how that goes, right? Here's another level that is at. See how it's finding support on your daily time frame? They may be ready to go, right? Okay. But if that's going to get ready to move and get long, you got time for that. Because if it continues to get long, it's going to take that fib out anyway. Okay. Look, this is what happened. Okay. ABCD wave played out, found support. It just chased it. Just chase that support. There it is. Okay. There it is. When that closes out, 2 to the left, 2 to the right, that's your fib right here. Okay. We need to let that swing low form though. Okay, because it can always push lower. Okay. So if we got a 4-hour that completed, right? Look at what's going on. Okay. This may be ready to push. Right? It may take that fib out on the 15th. But it is what it is, right? So I like to show those examples, right? You don't win them all. Okay, you don't win them all, but you get right back in the game. You get right back in the game. Okay, so that's the NZD Swissy, right? That would hit the extension, new fib, no opportunity for an 80-20 there. Okay, NZD JPY. AB boundary, shallow retracement, 118, 127 zone. It took an ugly ride. Look, 382, 61.8. I'm done. Do what you want to do after that price action. I'll see you on the next one. All right. We know there's a yen cross, right? Which one thing that I'm picking up on for the swing, right? Those other type of setups, right? Yeah, we're really not talking about, right? Things may be starting to catch a bid against that yen. Starting to look like it across the board. So we'll keep a close eye on that. But hey, if this is the play, hey, done. Look at all this mess we've been dealing with. Still was able to find an 80-20, getting down through the time frames, right? If this wants to get long, this is what I mean right here. Because look at this pullback. So yes, it's rangy. You got the fib right here. But if that, you know, these yen crosses are going to catch a bid, right? Everything's going to start catching a bid against that yen, right? It might be time for it to start breaking out to the upside. Right. That's for those C to D moves on a lot of these yen crosses that I'm looking at. But just wanted to go over that. But 80-20, right? So 80-20. If we look at the USD Swissy, hold on, let me go back to the NZD USD. And right. Look at how that price is pushing down, right? Trying to push down out of that zone. We haven't gotten to 382 yet, right? So that's even on a higher time. That's on a 4, right? Similar kind of like to that Euro CAD, right? That we saw, right? So that just, hey, you just start to scroll down, right? Look how choppy that was, right? But you see how it tapped that 118 level after that shallow retracement, and then we pumped right back up into the zone, okay? This is kind of like that Swissy, right? Didn't get it, but the next one, right? We got it off the 118, bang. Okay. Here's your longer term play, your swing. See how it's just bouncing around? May find support and get ready to push up. See what happens with that dollar. Okay. Haven't gotten a deep retracement on the daily. But we'll see what happens with that. It's just moving sideways. Okay. Dollar Swiss. Let's take a look at that. Still bouncing around, right? We called this a long time ago, right? Give it time. I don't care how it gets there, right? I don't care. But if it's going to make that move, hey, right? It's 455 pips, right? That's a daily fib pull down to the 4-hour level. Okay? So let's continue to keep an eye on that. Even if you're not trading it, right? Just watch the price action. Follow it. Journal it, right? See what happened to it. So you know, right? What can happen over time with price action. That's your dollar Swissy. Okay. There was another one. These dollar pairs I was tracking through. I don't know what I was looking at. No, that's the move that's dancing around on that short on the dollar CAD. Yeah. I wrote it down, but I don't know why. I don't know. Can't remember this one. I'll look at it again. And the last one I'm going to take a look at is this USD JPY. Right. Still trying to work his way. Right. Don't quite have that 382 yet, but it's come a long way. Right now, it's pulling back, retesting that zone. So I wanted to highlight that one for everybody to keep an eye on. Any questions on anything that we covered tonight? I know we went over a lot pretty fast. No. Does it kind of help everybody to see exactly what we're looking for, right? We try to be as transparent as possible. Right. You know, and then it's totally up to you what you decide to play, right? But just something simple, right, to get you focused on as you continue to develop into an awesome trader, right? This is one move that you can find all over the place. And you just have to be patient. All right. And then as we were discussing this morning, one of the things that we realized, right, through our journaling and going through, over the last year, especially with, all of this monetary policy stuff going on, and you had huge monetary policy divergence where you had all of these other central banks hiking rates aggressively. And then you had a period where the yen, well, still, I don't even say period because it's still that way, where the yen is just like, nope, we holding rates where we are at the negative rate. So everybody got beyond the yen. What that caused was, right, everybody started making a run on the yen, right, against the yen. So what was happening is when you get those fundamental, right, we say that all the time, no technical level or setup or structure will ever stand in the way of a strong fundamental occurrence. So you had a period of time where, okay, and we were discussing this morning, and where you kept seeing new AB boundaries form on your yen crosses, right? Okay. And you just kept getting shallow pullbacks and pushing straight to the D. And it's like, man, it's just skipping over. I'm entering at this zone and I'm just getting beat over and over again. Because what you have to, fundamentals are very important, because what we realize is like, right, what's crazy when it kind of puts it in your lap, right? So it's like, we just got strong jobs data, right? With the US dollar. And all the dollar crosses just went bananas. And all of them look sweet, like, 680-20 setting up. That's a bait game. Don't take it, right? Because the market is so impulsive because of, right, what happened with the fundamental report that came out. So it takes time for the market to come back into equilibrium and get back into those natural ABCD flows, right? So you'll jump in 4 or 5 pairs like, they're all at the 80-20. And then you look back and you think to yourself, like, these were all dollar crosses or these were all yen crosses. Now I'm over-indexed, right? I'm over-indexed with one currency and now I'm getting smacked, right? Because all of them, it could have been the dollar yen, the CAD yen, the Swiss, the dollar yen, the dollar CAD, the dollar Swiss, the pound dollar, like, man, they all hit these key levels at the same time. It's like, that's a sign. Don't fall for that. Sit back, wait, let the market settle. And if you do end up getting in one of them, just wait, right? So if you get a surprise rate hike more than expected for the Australian dollar, or a jobs report that comes out for the Australian dollar, and you see all these pairs running, don't fall for the banana in the tailpipe. Just wait, let it settle, let the market settle down, let it find its equilibrium, and then then make your move, right? That's really the only time we got burned big time, is when, and it was really because not having a clear understanding on the lasting impact that a huge monetary divergence can have on a currency and how long it will last. Some things you just have to live through, so when it cycles back again, you know exactly what's going on and how to keep yourself out of the situation, or how to take advantage of the situation, right? So just some things to keep in mind on that. Everybody get what I'm saying on that? Drop me a 3 in the chat. I'm sitting up here talking away. Okay. Because you'll see it. It's like, all these CAD pairs just set up. You have to think to yourself, why? And hey, maybe I'll take a shot on one of them. I'm definitely not about to plug in and play on all of them. Right? Because that could blow you up. Right? That could blow you up. Okay. So Ryan, anything to add before we wrap things up, sir?
Phenomenal session, bro. Fall in love with the process, man. That's it. Fall in love with the process.
Indeed. Hey, we really appreciate you guys. Thank you for hanging out with us from 9 to 10 p.m. at night. Everybody get some rest. We'll see you back 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Ryan Carthage. Have a good night, everybody. You're welcome.